Hi, everybody. This is Lawrence here from financialthing.com. Welcome to the live stream today. I think it is April 9th, Thursday. I'm still quarantined here in the USA. So today we're just going to talk about an update on what's going on in the peer-to-peer lending world and the investment world in general. If you have any questions, please go ahead. Well, I just noticed maybe the chat is turned off on the live stream, so I guess I did not turn it on. I'm going to see if I can do that. Maybe I cannot do that one. So we're just going to have to go with no chat today. It'll be kind of a short stream. I'm just going to go through some of the news things that I've heard and things I've received about the different peer-to-peer lending companies. I am certainly less concerned about peer-to-peer lending now than I was a couple of weeks ago. I think that the market is coming back, and I think it will come back strong. I think the economy is going to be fine. Things are going to take a little bit longer now with COVID, but I do see a sort of a curving of the COVID problems, especially if you look back to the European countries, even though they're still having cases, but I definitely see it slowing down. And I think that the economy will recover. It's going to take some time, but you're probably more interested in peer-to-peer lending in general. There has been a lot of actions taken even just in the last 2 weeks with what peer-to-peer companies are doing to look at their loan books and to look at how many new loans they're going to take. What I have been told by several peer-to-peer companies that I've spoken to is that their loan volumes for new applications have been pretty high. So what's happening is a lot of small businesses, for instance, need lending finance, and they're coming to peer-to-peer companies because it makes a lot of sense for them. They can get the finance done quickly, and high street banks just are not going to give them probably the credit they need in the time that they need it. And existing loan books, what's happening is the government grants and loans that are going to be given to other businesses will help to pay and subsidize those loans that the peer-to-peer companies have given to these small, medium-sized businesses. And what I think is going to happen is that you'll see once COVID really starts to slow down, that peer-to-peer companies have more loan applications than they know what to do with, which will filter through to other companies. It used to be a very competitive loan market environment to where there was more loans and sorry, I take that back. There was not enough loans to go around, and the peer-to-peer companies were sort of fighting over those loans. And I think you're going to sort of see the opposite when this COVID situation really starts to die down, which for you as an investor is a good thing, because a lot of the times before the COVID situation happened, people were unable to invest their money quickly enough, and because there was just too much investor demand and not enough loan supply. And I think you'll see that switch around and become the opposite, which is good for peer-to-peer lending companies and good for investors. And what I've experienced, I've done a couple of test sales through some of the companies that I've invested through. LoanPad, I've been able to exit quickly. I still am very bullish on them. I think they've got a good situation with what they have going on, and they found that less people are starting to exit and wanting to exit. So there is good liquidity within LoanPad. Let's look at RateSetter. I've noticed that their provision fund really dropped. I was looking at some of my numbers from last year of November 2019 when they had a provision fund that was £11.5 million. And today when I looked, it was listed at 6.95. So you can see that they've dropped that provision fund by a little bit less than £5 million, which is quite a lot. And then they had news yesterday that they had a sale of old debt. So what happens with RateSetter Sorry, I'm a little bit bumbly today, dry mouth. With RateSetter, what they do is they have loans that go bad on them and they try to recover. They have a department within RateSetter that tries to recover those loans. And when they feel like they've either maximized that recovery or they're unable to recover anything, they package those loans up and sell them to third-party debt companies for probably a small percentage of what the loans are worth. So they packaged up a bunch of loans, sold them to a third-party debt company, and what they're able to do is add that money from that sale to the provision fund. It was £4.65 million, and what I'm unclear about is whether their provision fund amount that they display on the website today includes that 4.6 million or does not, because it's at 6.95 million. So I'm going to presume that it does include the 4.65, which means the provision fund would have been 2.3 million, which is a really steep drop off from where it used to be in November of 2019, which is 11.5 million. What that provision fund does is it covers all investors equally to pay out when loans, when the interest is missed. And it is concerning to see that the provision fund was down, whether it was down to 2 million or which I'm thinking it wasn't, but I'm not entirely clear whether it was at 4 million or down to 2 million where it was. Hopefully that 6.95 doesn't include the 4.65 they've just added, but if it does, it's still better than what it was. And also I'm predicting that if you try to exit from RateSetter, you're probably going to be looking about a month for them to get through those loan sales, whereas we've been used to really good liquidity on RateSetter for the last few years, and obviously that's changed. I've tried to sell some things in the Access account, and it's been about a month. It's been a couple of weeks since I put through the sale and have not seen that move. And incidentally, I had a little bit of a problem that I think is an issue with my account. I had some money, a small amount of money in my Access account, and I put a portion of that up for sale, about 50% of it. What happened was my account balance on that Access account went to zero. I was really confused because on the transaction list, it didn't show my sale being put up for sale, so the 50%. And it also didn't show the remaining balance of what was supposed to be in my Access account. So I would advise anybody that's in RateSetter to check your account balance and make sure that it is correct where it needs to be, because sometimes softwares do make mistakes. And I've had that with RateSetter currently, which I've emailed support, and they are looking into why my account balance in my Access account is showing zero. So very odd, but I'll keep you updated. Please also take a minute just to hit the thumbs up on the stream and hit the subscribe on my YouTube channel. If you can, that would help me out a lot. Helps with the YouTube algorithm, with the searches. I don't make a lot of money off these YouTube streams, so every little bit helps. Let's go through my list. So Funding Circle, obviously, if you're trying to exit from Funding Circle, you're going to see that you are probably not seeing much in the way of any activity from sales. They have suspended their secondary market, means wherever you were in the queue to sell your Funding Circle loans, that's just going to be canceled out. Very frustrating, I'm sure, if you're a Funding Circle investor, which I am really not. I have a very small amount. I pulled out of Funding Circle several months ago. I just not really loving the way Funding Circle is. I'm not loving the share price situation, which was at a 440p issue. It's down to 55 now. Was hovering at 100p before. It's just never been really something that Funding Circles. It's just never given me the warm and fuzzies, and I've invested through them twice, sort of exited out twice. What they do say is if you ask an investor who's looking to get your money out, you're typically going to see 3 to 5% of your entire investment amount come back in capital and interest if your loans are in good standing, which a lot of people have several defaulted loans. So if you have any questions, just leave them in the comments below and I'll answer them next time. I plan on having a live stream every week. So next Thursday, I'll answer any questions that you have in the comments underneath. Again, apologies, I don't have the chat turned on for some reason. It probably defaulted to being off. Thanks, YouTube. Maybe they did it on purpose because I'm talking about things that YouTube doesn't like, which I don't know if you heard about this, but if you follow the London Real podcast with Brian Rose, he had somebody on there that I think his last name was ICE or Ek. And he was talking about the coronavirus and 5G, and it was one of the second most popular stream ever on YouTube and had ridiculous amount of views, 5 million. And YouTube took it down. They banned the video because they didn't like the content of what Brian Rose's guest was saying about the connection between coronavirus and 5G and so and so. So YouTube apparently is not a completely freedom of speech platform. It does take things down, so who knows? I don't think they're going to take my videos down, but they're pretty insignificant compared to the rest of YouTube and what's going on. So anyway, we'll continue on LendingWorks. They have put a freeze on new signups, so if you want to sign up for LendingWorks right now, you cannot do that. Also, new investments are on a freeze, and there is no new loans being issued for the next 90 days. And what they said they've done is they've also stopped their secondary market. So if you're trying to exit, you cannot right now. They're trying to build up their Shield fund, which is incredibly low. Used to have several £100,000 and now is down to £75,000. And what I have noticed is it's just not increased at all since I started following this a couple of weeks ago. Probably actually 3 weeks ago, I've just not seen that Shield change. I don't know if it's because they haven't updated their numbers yet or whether they just don't have any money in their Shield fund, but that's one of my biggest concerns right now with LendingWorks. They don't have a buffer. They don't have a provision fund. Even though they do say they have several millions of pounds of estimated money that will come into the Shield fund once those loans are paid into. I just haven't seen any change on the Shield provision fund, which is very unusual. So I'm really keeping an eye on that, but I still have money invested through them, and hopefully everything will be okay. Assets Capital, we've seen this annoying addition of a 0.9% annual management fee, which I think is about 0.75% a month to every person that's invested through them. Yeah, I mean, it's kind of a pain, the fee, but to be honest, it's a temporary thing. I hope the Assets Capital will remove it once this coronavirus thing is passed. And they've also voted, if you're an investor, you would have received a vote recently about payment holidays for borrowers. So they're going to issue payment holidays, and those borrowers will have to repay that interest in the future, but they are going to, I believe it's a 3-month cut of slack on that, which I voted yes. I thought that was a good idea because honestly, it's better to give people leeway on those loans than to be trying to go into collections on those loans. It's just a bad time to be doing that. Recoveries would be poor, and that's the right thing to do. So I did vote, and I believe they said that only 1.7% of all voters voted against having payment forbearance for 3 months on borrowers. Hopefully you voted the same way. So LendInvest has been one of the companies that really has continued to move forward with their lending. They've had, I believe, 140, 150 loan applications over the last month, and they've continued to write new business. They also have a really good capital base of lending with credit lines and also the retail lenders like you and me. I think they have approximately £2 billion to lend out, or their total capital base is $2 billion. So one of the problems with peer-to-peer lending that you're seeing right now is when investors stop lending, the companies that are retail based, kind of like your rate setters, your Assets Capital, the companies that don't take in institutional credit lines, they are not able to continue to write new loans because they don't have the capacity from incoming investors like you and I putting in money into the platform. So they consequently cannot lend money out to new loans. So you see those freeze in loans like LendingWorks has done. So yeah, LendInvest seems to be healthy at the moment, continuing forward with their business. They have furloughed some employees, but nearly everybody is working from home now. So they are trying to reduce some of their expenses with regards to staff. Octopus Choice, things are the way they were a couple of weeks ago. Everything is frozen to new investments, and if you're trying to sign up for Octopus Choice, you're not going to be able to do that right now. So they've just put everything on hold. Not entirely unusual. Not surprised at all about that. I'm going to have a little gripe right now. This is Lawrence's gripe session, and I'm really disappointed in MoneyThing at the moment. They were one of the companies that I had very high hopes for, and what I'm frustrated with is one of the recent loans. I'm not going to go into details about who the lender was, but it was a multi-million-pound loan, and the recovery on the loan was several £100,000, but the original loan was a couple of million, and 34% were taken in recovery fees, including a fee for MoneyThing, which didn't really show what the fee was for. And then they decided to put a vote forward to say, do you want as investors to go after the borrower legally to try to recoup some of these lost capital and interest that has been experienced? And what I'm annoyed about is the lack of due diligence that MoneyThing showed. It's one thing to say we were only able to get a certain amount in recovery, but I question where was the due diligence on their side to have such a big loss on one single loan? They put that down to valuation mistakes that, legally they have a obligation to go after the valuer who they say made a mistake with the valuation. But also, it's one thing to rely on a valuation, but there should have been more due diligence, I think, on MoneyThing's side, where they would look at that loan and say, do we agree with the valuer? How do you get it that wrong? And not only them, but Lendy's exactly the same, Funding Secure, exactly the same. And what I want to say is that anybody who's investing in high interest rate lending through business loans, there's only a couple of platforms that are continuing to do that type of lending, but this is one of the problems. If those companies go into administration, you're just going to see the recovery amounts are going to be much lower than the loan amounts. A lot of the times the valuations are just not accurate, and that sometimes businesses are very hard to value. So just be aware, if you're chasing 12, 13, 14, 15% interest per year loans, there's just an extreme high risk in those businesses. And, I don't choose to invest in that type of lending anymore. I've definitely, learned a lesson when it comes to high interest rate lending. I'm now choosing to go with the more conservative, lower interest rate, more steady businesses, and also seeing that property is actually probably pretty secure when it comes to these property lending loans that have been through companies like Cufflink, Crowd Property, LoanPad. The reason being is that, one thing, if you're a property developer and you're working on a development now, it's going to take some time for those developments to be finished, which, it's unfortunate if you're a developer who's finishing things now in April, or if you finished in February and March, because you're going to see that slowdown. But the property security is still going to be good. I don't foresee a huge drop in property values in the UK. You're not talking about, in the US 2008, 9, and 10, where you saw 50% drops in property. I think in the UK you'll see, if anything, small incremental drops in the property values. But companies like LoanPad have their loan to value so low at 15 to 40% that there's just so much padding there. If a property does go into default, there's enough room to recover those property loans. So I'm actually pretty bullish on property style lending at the moment. One other thing, like I mentioned before, if you are invested through companies like Asset Capital, where you have small and medium business loans, you're going to see that those businesses will be covered in some cases by government grants. And I've seen it personally in my own investing. My family has a couple of commercial properties, and when the COVID virus first hit, those tenants asked for forgiveness for their rents in entirety. And then one of them came forward just yesterday and said that they think they'll receive a government grant to help to cover their rent payments. And you're going to see more businesses that are, have loans through companies like Assets getting those government grants and loans to help them pay for those loans. So I don't think the situation is going to be as dire on the defaults as we initially first thought. If the COVID runs its course quickly, hopefully things will ramp up and these businesses can get back to operating and start to repay those loans on time, which is what I think is going to happen. One other piece of news, we saw another company, Bassett and Gold, go into administration. And they were not a company I had very much experience with. I did get quite a lot of emails about that and saying, would I invest through Bassett and Gold? And my answer was honestly no at the time. And this was before I knew anything about their administration and before the COVID hit. I just really know anything about the company. And the problem was they had a lot of their loans through a payday lender that went out of business. And when the payday lender went down, it took Bassett and Gold down with them, which is really unfortunate. I hope that none of you were invested through Bassett and Gold, but yeah, unfortunate side impact of COVID taking down one business and then in turn taking down Bassett and Gold. The other company that I do have money through that sent out some news this week was Property Partner, who's freezing dividends until June, and then they will look at it. So if you're a Property Partner investor, you're not going to get any dividends for now. They've suspended sales of Property Partner is a share company where you own shares in properties, and what they do after 5 years, they send out and vote and say, do you want to, as an investor, do you vote to hold on to the properties or do you vote to sell? So what they're doing is suspending those 5-year votes now. They sure want to wait and see what happens with the property market, and they're also getting the properties independently reevaluated again. They do that every certain amount of time. They get the properties valued to see where they are, how much they've fallen or risen. So they're going to do that now while they suspend the sales of the 5-year anniversary properties. The resale market too, if you're a Property Partner investor, you're trying to sell your shares, you're going to see that the shares have dropped about 10% over the last, I think it's over the last 6 months to 12 months, you've seen about a 10% drop. So people are trying to exit. Actually, it's not a bad time to buy some shares on Property Partner if you have faith in that business and you think the UK property market is going to survive this, which I think it will. You can buy some pretty good discounted shares on Property Partner at the moment. I've kind of left mine as is. I did sell some shares at the end of 2019 to rebalance, sort of diversify, not to have too much money into any one of these peer-to-peer lending companies, but I still have some money invested in Property Partner, and I think the UK property market will be fine. If anything, with Property Partner, what I'd be concerned about is their development loans that are second charged. I do not like second charge loans, never have, and Property Partner is one of these companies that offers second charge development lending along with their property shares. And their company that they do their lending through is a third-party company, so they are sourcing their second charge loans from another company that only does second charge loans. So I'm less excited about that type of lending. So that's sort of my rundown today on what's going on. Again, apologies for not having the chat activated today. I'm still a little bit technically unchallenged, but I do have a mic plugged in today, so hopefully the sound is a little bit better than it was. Yeah, so if you have any questions or comments, generally, I think the peer-to-peer lending market, you may see a couple more companies that are not able to survive this, and probably, there might be a consolidation of some smaller lending companies that are bought out by the bigger ones. I think you'll see the strong survive and the weak will not make it. Just very few of those weak companies. I don't know which ones. I don't know if I have no crystal ball to know what's going to happen, but I do see some really good actions being taken by the peer-to-peer companies, and especially in the communications department. We're getting a lot of emails from the companies every week saying, look, this is where we are. We want to be transparent. And that's really important for investor confidence. If you know what's going on with the companies, it certainly makes me feel better as an investor. So that's what's going on in peer-to-peer. Stock market wise, I mentioned last time on the stream that I'm extremely confident with continuing to buy index tracker funds. You've seen a jump from the Dow was in the 18,000 range. We're at, I think today, 23.5. So you are still going to see volatility, I think. I think there may be a little bit of a false sense of security with the stock market still, because we still haven't really seen the economic fallout from March yet. And I would imagine when companies report incomes, you're going to see some volatility, maybe some downward falls in the stock market. But I'm still continuing to buy specifically the US equity index tracker. I have no doubt in my mind that it will recover absolutely fine. That it already has started to show signs that the markets will recover. There's some pretty good stocks out there at the moment that are very, very discounted. If you read my site, I'm not an individual stock picker, and this is just opinions. I'm definitely not saying to buy any particular stock. But if you are somebody that's really stuck on buying individual shares, you could look at the cruise line industry. I looked at Norwegian's stock price fallen from $57 all the way down to $8 at one point. I mean, if you think that Norwegian is going to be able to recover from this, which I would imagine the company's too big to go out of business, and they'll receive government funding to continue to remain okay, then companies like that have really taken a beating over the last. Comments are off, but hit the thumbs up if you can. I know everybody is being affected. If you're a business owner right now, me with the website, financialthing is my business, and when these financial peer-to-peer lending companies stop allowing subscribers, obviously it affects my income just in the same way. It has this really weird knock-on effect in ways that you don't really think about it. Some kind of fixed income, and everything continues well. But if you're a owner, my heart definitely goes out to even if you're working for another company that's sent you home, definitely my heart goes out to you. I hope everybody's safe and stays healthy. And again, if you have a comment, please leave it below and subscribe to the channel. And I will see you next Thursday at the same time. And be safe, everybody. Take care.